Good morning, YouTube friends, Facebook friends, LinkedIn friends. Thank you so much for attending this morning. We're going to get started in just a moment. Okay. Good morning, everyone. Saturday morning, March 21st. Thank you for attending. Should have a light audience this morning, and I actually have a full calendar today. So I am going to just start diving right into it. Saturday mornings, I typically reserve for my How to Boost Credit webinars. So the whole goal here is how to get your credit score up 60 points in 60 days to qualify for some of the down payment assistance and home buying grants that I help connect people with. For those of you who don't know me, my name is John Collins. I have committed myself to teaching and educating people on down payment assistance and grant programs so they can get into homes, so they can purchase homes with very little money out of pocket. Most of the people I work with are coming from rental situations, are able to purchase with just a few $1,000s out of pocket, and sometimes even a lot less. So I'm going to try to move at a pretty quick pace today because we have some new announcements that are a twist to some of the programs in Southeastern Michigan where I tend to specialize in, although I work with people all over the country, and these credit boosting tools work all over the country. So I'm going to move at a pretty fast pace this morning. So please get your phones ready for some screenshots and take as many notes as you possibly can. You can always reach out to me, schedule a call through my website, owntheroof.com, and I will put the links to my call or my calendar right now. So I'm going to put this in here a few times this morning. So here it is. owntheroof.com /book-free call. So that's the best way to get a hold of me. You can also try my cell phone number. I'm a hawk on that, 248-252-7283. Always enjoy coaching people on how to get their credit scores up quickly to qualify for these programs. So the three keys to qualifying for a lot of these programs are, number one, you got to have the money. And I will tell you, the money is the easy part. So do not focus on that. With the down payment assistance programs and grants that I coach people on, the money's the easiest part. It's usually lately, especially in today's economy, credit is struggling right now. So that's why we do these webinars, to help people boost and kind of work the system a little bit to their benefit. So, and then the third thing is income. You've got to have some type of income coming in to obviously make the house payments. So those are the three things. There's a couple of more things, but those are the three things that we can control. So I find that as far as the buyers or renters are concerned, those are the three things that matter. The other side, those are bank issues. But anyways, with that being said, we're limited for time today, so I am going to jump right into it. So how to boost your credit in 2026. So who is this designed for? This is designed for people whose credit scores are anywhere between 5 to 600. Okay. If your credit scores are in 700 and you want to push it up to an 800, not that this won't work, but it's just not designed for that. Okay. Or people that have no credit scores, or how to handle it if you've had a recent bankruptcy, repossession, or recent collection on your credit report, or anyone that just wants to understand how the mortgage industry works with regards to credit. And how to overcome some of the hurdles out there. So why do I do that? Well, or why do I do this? The rental market has been in rough shape for years, and it still is, especially if you are on that entry level rental side. We did get some numbers this past month from Washington that said that the price of rentals is actually decreasing. I personally think that's hogwash. That's that's the high end rental market that's actually pushing the rental numbers down. And what I mean by that, the amount that people pay on a monthly basis for renting has gone down, first time in a long time in this country. But I feel like that's because the high end rentals. I don't see the entry level prices coming down. Right now, a 2-bedroom apartment across the country is $1,300 to $1,400 a month. And in my backyard, it's actually $1,350 a month for a 2-bedroom apartment in southeastern Michigan. So right now, that equates to about $150,000 mortgage. Now imagine with some of the down payment assistance programs and grants that we can toss on top of that, people are buying $200,000 houses. Also, there's a lot of misinformation out there with regards to what to do to boost your credit. Okay, a lot of misinformation. People think that paying off their collections that just hit their credit a couple of years ago is going to help them. It does not. And I'm going to go over that in detail today and tell you what are the best practices on that side. And I also see that people are overpaying for credit repair and credit. So people are paying astronomical interest rates to establish credit. And I get that if there's a long game to it, like getting into a house. But there's no reason to pay more than we have to. So if we can improve those interest rate situations, we obviously want to do that. And right now, I feel like the credit repair industry is dying. And the reason it's dying is AI is clicking in. So one thing I am committed to is I want to do a webinar teaching people how to fix their own credit using artificial intelligence. So oddly enough, you can go to freeannualcreditreport.com, get your free credit report, take that, save it, and upload it to artificial intelligence and ask it how to fix your credit and to challenge the things that are out there and to write the letters on your behalf. And it will do all of that. All you got to do is print it out, send it in with the documentation it recommends. So I will try to get to that topic and instructional video in the next 30 days. All right. Next thing we want to touch on, the goals for today. Number one, I want to teach you how to get your credit scores up 60 points in 60 days. Ideally, we're going to show you how to identify areas on your credit report that are ripe for quick impact or quick spike in your credit score. If you need help adding new credit, we're going to give you some tools there, and we're going to help you set reasonable goals that have a predictable, successful timeline so you and your family can make some plans with regards to a possible upcoming move. All right. With that being said, I'm just going to dive right in. Again, for those of you who don't know who I am, my name is John Collins. I love educating people on how to get into homes with very little money out of pocket using down payment assistance programs and grants. Wasn't too long ago, I was in a rough situation myself. I have spent over 38 years now in the real estate space. First few years was selling real estate, spent over 20 years in the mortgage world. That's how I know how to do all of this stuff and how to dive into the programs that are out there. And about 15 years ago, I was a principal in a mortgage and title insurance company and found myself in an awkward position where there was a significant amount of embezzlement that went on from our bookkeeper. And that was a really, really hard spiral down and financially ruined me. But what doesn't kill you makes you stronger, as they say. So we were able to rebuild. And I can tell you 15 years ago, rebuilding credit was a lot harder than it is right now. Right now, there's so many tools at our fingertips. But so I am familiar with all of it. Bankruptcy, foreclosure, you name it. I've been through it. I can tell you it's whatever. Wasn't fun when it was happening, that's for sure, but it's something that you can get through. So it does not define, for many years, I took it as a life-defining moment. It's not that at all. It does happen. The bankruptcy is a tool, okay? Use it if you need to. So a lot of ways out there. If anybody ever wants some coaching on that side, please don't hesitate to reach out to me. Always happy to share my story with you and what I would do if I were in your shoes. So after all of that, when I was getting back into the real estate world, I realized that do I really want to jump on that kind of like treadmill just to build things back up again? Or do I want to have purpose where I'm actually helping people? So for me, there was a mental reset that my main purpose here in this world was to help people move forward, not just jump on that treadmill to be at the top of whatever sales leaderboard or this or that. No, for me, it's all about helping, paying it forward. And as a result, in addition to these credit repair webinars, my main webinars are how to purchase with no money down using down payment assistance programs and grants. And I'm going to touch on that later in this webinar. So just to go through what goes into credit scores, okay, where do they come from? There are 3 credit bureaus that are focused on in the mortgage world: TransUnion, Equifax, and Experian. Typically, credit scores can run anywhere between 300 to 850, okay? Ideally, the mortgage world, for the programs that I work with, they are looking at the middle credit score. Now, there's different types of scoring models. There's the Vantage score and there's the FICO score. The FICO scoring models, we want to use 3, 4, 5. I heard 9 is one that's used now as well too. So we want to use the FICO scores. Those are the scores that the mortgage world is going to focus on. And they pick the middle score. So they're going to grab all 3 credit reports from each bureau, okay? And they're going to merge them together into one credit report. It's called a tri-merge. And they're going to get the credit scores for TransUnion, Equifax, and Experian. They're going to get the FICO scores, and they're going to pick the one in the middle. That's what they're going to use to point you in the direction of whether it's approved or not. And it is kind of a pass-fail for a lot of the programs out there. So a little bit different with regards to the underlying mortgages, and I go into that a little bit more detail in my webinar, how to purchase and what goes on, how to purchase with the down payment assistance programs. But ideally, we want to determine what the minimum credit score is for whatever program we're looking to tap into. Most creditors only report to 1 or 2 of the 3 credit bureaus. So keep that in mind. If you have a loan with Toyota Motor Credit, they are only going to report to probably 2 of the 3 credit bureaus. And the reason that is, anytime a creditor reports to the credit bureaus, they have to pay for that. So as a result, they typically don't report to all 3. There are occasions when you use credit building tools that report to all 3 because that's what benefits you to get a boost in your score, but typically not, unless it's a mortgage. Mortgages report to all 3s, and there are some creditors that do, but not as a rule of thumb. So ideally, we want to isolate quick spike opportunities for your middle and highest credit score. Remember, we're going to pick your middle score. So the lowest score, it doesn't matter. The middle score matters and the high score matters. We want to make sure both of those 2 scores are in the strike zone for whatever program we are going for. All right. Oops. Next issue. All right. So next slide. What determines a credit score? So 35% of what goes into your credit score is based on your credit history. So no late payments in the last 12 months, that hits us pretty hard. If you do have any late payments, we want to call the creditors. Ask them, hey, if it's an isolated incident, can you possibly remove it? I don't remember being late. When you make that call, do not settle for the first answer you get. I had someone a couple of months ago called Toyota Motor Credit. She had a 60-day late on her credit report. That's a hard no. 60-day late on a car, you won't get approved. But what we did do, or what she did, is she called Toyota and said, you know what? I had an isolated 60-day late. I didn't realize that. What can you, is there anything you can do to help me out? I'm applying for a mortgage and they are not approving me because of this. What Toyota did is, well, the first person said, sorry, can't help you. And then, obviously respectfully, I appreciate it. Thank you for your help. Can I please speak with a supervisor? She spoke with a supervisor. Supervisor made a change. They changed it from a 60-day late to a 30-day late, reported it on her credit bureau, sent her a letter, actually. We were able to take that letter and get her credit report modified in 48 hours. So there are workarounds for this. But I always tell people, if you're calling a creditor, come from a position of kindness. Okay. One thing I want to tell people, if you see collection accounts, I'm going to say this a few times today, do not pay off your collection accounts if they are over 2 years old. So reason being, you see an old collection account out there, you're going to reactivate it. So if it's over 2 years old, the damage is done. You pay a collection account 2 years old, today it's going to show up next month as April 2026 collection paid as agreed. Your score will go down. Okay. So don't get tripped up by that one. A lot of people make that mistake. So the next thing, credit utilization. 30% of what goes into your credit score is based on your utilization. And what that is, that's where the balance on your credit card or revolving debt is in relationship to where the limit is. So if you've got $1,000 limit on a credit card and you owe $1,000, you're at 100% utilization. If you owe $200, you're at a 20% utilization. So ideally, we want to pay those things down. So if you've got a credit card with a $300 balance, $300 limit, that's 100% utilization. If we paid that down below $90 or 30%, it used to be where you would get a 20 to 30 point lift out of that or bounce in your credit scores by making that maneuver. Now I'm seeing 30 to 40 point lift. And the reason is credit card default rate. And this is just my opinion. My opinion, the reason this is happening is the credit card default rates are skyrocketing in this country. So if you are able to pay those credit cards down in an environment where the default rates are skyrocketing, they're giving you more of a bounce than they used to. Okay. I feel like we are in this real-time world where these payments or paying down credit utilization is giving a bigger lift than ever before. Okay. So 30% of what goes into your credit score is based on the balances you owe on revolving debts. Next thing, length of credit history, 15%. So if you have some old credit cards out there you haven't used in a while, and you close those accounts, it's not going to help you. Your scores will probably go down if you have a thin credit profile. So do not close old accounts and do not prematurely pay loans off. I just had someone that got tripped up on this. They had an auto loan. They had 3 payments left on it. They thought, oh, hey, if I pay this auto loan off, that would be great. My loan's going to shoot up or my scores will shoot up. It doesn't. What happened is it showed up on the credit report, the loan was paid, and they lost what we call a trade line. They lost something that was giving them good credit, and it showed up as paid off. It didn't give them the lift. So do not prematurely pay any loans off. Don't stop paying them. Pay them just like you're supposed to, but don't prematurely pay them off. It could backfire for you. Okay. So in addition, frequency of new credit is 10%, and the types of credit is 10%. So they call that credit diversity. So ideally, I'd like to see someone with maybe an auto loan, a couple of credit cards, and maybe a structured loan payment line of credit, things like that. That's a good amount of credit diversity. That will give you a little bit of a spike there. So 35% is based on payment history. 30% is on your utilization. 15% for credit history. 10% for frequency of new credit. So the more frequent and the more new the credit is, the lower the score is going to be. So if you've got some old stuff out there, leave it. Okay. No sense playing with it. All right. Next thing, how to handle some of the life-altering things for people. Lately, the conversation is over student loans. Okay. Student loans are out of forbearance. They're basically either you're in good repayment terms or you're in default. Okay. Or you're deferred, which means you're going to school still. So if you are deferred, that is not going to be acceptable to purchase a home. You will need to take your loans out of deferment. Okay. Please call me for coaching on that. Typically, we can get an income-based repayment plan, but we want to make sure we structure that so we have very, very small payments. Don't take 0 for a payment. Forbearance, a lot of people were in forbearance for COVID. They're out of that right now. If you happen to be in default because you did not make payment arrangements after forbearance, we need to take advantage of some of the programs that are out there to reestablish your payments. Okay. So if you are in default, we can flip that script quite easily just by calling your student loan servicer, asking for the a program to forgiveness program for late payments by reestablishing payments. You do have to make your payments for 90 days. Once you do that, they will take that negative information off of your credit report. So there are ways to reestablish student loans that are in default right now. So for example, I've got a few people didn't do anything with the student loans. They're in default right now. Their credit scores are in the mid 500s. Once they make 3 months payments, it's going to flip from a negative on their credit report to a positive. Their scores could shoot up 100 points. It's crazy, but that's how it works for student loans. So they do have a program where they will get you back on track. Okay. If you need some coaching on that, call me. In fact, I encourage people to call me for coaching on that one because I want to make sure that they set that up properly. Let me put here is a link to my calendar. Put this in the chat box right here. And you know what? I want to make sure that we've got you covered out there on Facebook, YouTube. Good. What about debt consolidation? Debt consolidation, I like that. Before we do it though, I would encourage you to reach out to me because what I want to do is I would probably want to put you in touch with a lender that can put you through a simulator. So before we go through the hurdles of debt consolidation, let's see what the outcome is going to be. Okay. And I do touch on that in a little bit. So, but debt consolidation can be a great tool. But I always like to know what the outcome is going to be. So they have some incredible tools out there that loan officers can use. Plug your information in, and they will tell you how much your score will go up by using debt consolidation as a tool to restructure things. So good idea. Thank you for the question. All right, repossessions. If you are unfortunate and have a repossession on your credit, I can't tell you how many people I talked to, co-signed loans for family members or friends, and they didn't make the payments, and boom, the repossession shows up on your credit. Or people that bought cars on B lots, drove away 30 days later, something serious happens, and there's no accountability. So tough when you see that happen. But I am finding that the repossessions are over a few years old. Some of the approval models for the programs that I work with are being more forgiving on that. Okay. There are ways, if we reestablish payments prior to applying for the programs, that works out for some people, or just paying off the balance if possible, if it's low enough. But more often than not, some repossessions are actually really big amounts. So that being the case, again, that's another thing that I'd like to coach people on a one-on-one basis. But I have had people recently get approved with some old repossessions on there. So please reach out to me on that. If you happen to have been through a bankruptcy, there are two types of bankruptcy: Chapter 7, Chapter 13. 7 is when you wipe the slate clean. If you ever have the option, choose the 7. Treat your personal like a business. If you can get rid of everything, do it. It's important that after the 7 that you rebuild credit as soon as possible. And do not have any late payments, and don't drop the ball on that. So any late payments or collections after a bankruptcy will crush your scores. It's very easy after a bankruptcy to get your credit scores up in the 700s. The algorithms that generate your credit score know you just got to pass it at Chapter 7, and that you can't do that for many years. So that being the case, you open up a few trade lines, few lines of credit, boom, you can get your scores up very quickly. But if you're late, it will crush your scores, and the lenders do not like it because they know you just got a free pass. Okay. Chapter 13, that's when you reorganize, put everything together, and they negotiate the balances down, and you pay a trustee. You can still buy a house 1 year after a Chapter 13, or after you start it, even while you're in a Chapter 13, after 1 year of payments, you can purchase. Chapter 7, you need to wait 2 years after the Chapter 7 discharge before you can purchase. Now, collections. This is one I want to focus on. Collections over 2 years old, please leave them alone. Do not pay them. We will negotiate the balances after we get you pre-approved. Remember what I said earlier. You pay them, your scores will go down. What we typically want to do is get people pre-approved. And then if part of the approval process or part of the approval conditions are that we pay those things off, we can go back and negotiate, get proof that they're paid off, negotiate those balances down. And if your score goes down, doesn't matter. Okay, because we already have your score locked in. What we don't want to do is pay them down now, reactivate them, have them show up, and then your scores go down and it derails everything. Anything less than 2 years old for a collection, we want to deal with those on a case-by-case basis. Medical stuff, I always tell people, leave those alone. If they're under 600, definitely leave them alone. Those shouldn't even be on your credit anymore. But over 600, leave it. We'll attack those later. They're very forgiving for larger medical bills showing up on your credit. Anything on your credit that's 1 to 2 years old, we want to run those through a credit simulator just to see how your credit score will react to paying those off. And anything a year or less, we address those on a case-by-case basis. If it's less than 6 months, we probably want to pay those off, and we can probably retrace your credit scores and watch them go up a little bit. They won't go back up to where they were before the collection hit your report, but it will go up some. And sometimes we want to pay those off. Okay, that's how we handle some of those big things. Here are my steps to rebuild credit. Number 1, you want to get a copy of your credit report with all 3 credit reports. Annualcreditreport.com. That's where we go. www.annualcreditreport.com. If they give you an option to pay for all 3 FICO scores, do it. That's what we want to know. Okay. Shouldn't be too much, $30 or something like that. The reports are free. We want to determine what the 2 lowest credit scores are, the 1 or 2 credit scores that we need to work on, which could be your middle or high scores. Okay. And then we want to understand your credit profile. What's driving those scores down if needed? Are they late payments, collections, things like that? After that, we want to analyze whatever lines of credit are open. Remember, we talked about utilization. We want to see how we can manipulate that utilization to get a quick spike in your score. And we also want to make sure that you've got 2 or 3 trade lines. And that's just 2 or 3 accounts, credit cards, old auto loans, current auto loans, things like that. Because we want to determine if we need to add credit. Okay. We can add alternative trade lines to your credit report. And a lot of times if the credit score is low, we can run your credit through a credit auditor or simulator to verify what the outcome will be if we start manipulating things. Now, if you need to add new credit, there's always secured credit cards, secured loans, and becoming an authorized user. I'm going to talk about that in just a few minutes. And if it's really serious, in other words, below 520, below 500, we want to consider possibly challenging things with letters and disputing things. That's more a one-on-one consultation and case, we're kind of sharpshooting at that point. All right, here are the things that we do want to do. Number 1, we want to get a copy of your report. Okay. Again, I have lenders that I can refer you to that will go through and put your credit through a credit simulator. They will do that free of charge. Okay. All you got to do is schedule a call with me. We'll figure out where your path is and whether it's a good time to be doing that. Okay. So schedule that call. Increase your credit card limits can reduce your utilization. A little bit harder to do that in the environment they're in right now, but it does work if you've had a good history with your credit card companies. So if you have a balance of, if you have a credit card with a $300 limit, $300 balance, imagine you get that limit increased to $1,000. Now you're down with 30% utilization. Your score will shoot up. Okay, that's how that one works. We want to look at if we have credit cards, we can pay them down below 30%. I always tell people don't pay them off. If you want to get the biggest bang for your buck, pay them down to $10. If you leave a slight balance on your credit card, you get a little bit higher lift than a 0 balance. Okay, so keep that in mind. So you know what? I apologize. My Facebook and YouTube people, I get a lot of, I've got a couple different Q&A areas. Let me paste my calendar. There you go. Here's a link to my calendar. Right there. Just click that link and you'll get right to my calendar to schedule an appointment. Good. All right. Increase credit card limits to reduce balances. We talked about that. Paying down. Oh, added as an authorized user. Oh, gosh, it's always a hard question asking people for help. At least it is for me. So, but keep in mind, when I say asking as an authorized user, we're not asking for money. We're just asking for a little help. Okay. And this is how I tell people to frame the question with a family member or a friend. So first, we want to have a conversation. Okay. We want to make sure that if we add this authorized user add you as an authorized user to an account, we're going to get a good enough lift to get you across the finish line. And if that's the case, then what we want to do is we'll go, hey, family member, or hey, friend, you know what? I got approved for a down payment assistance program to purchase with just a couple $1,000s out of pocket. The only thing is I don't have enough trade lines or lines of credit showing up on my credit report. Is there any way that you can add me to your best credit card? I don't need any money. Okay. I don't need the credit card. I just need another trade line of credit showing up on my credit report. Okay. It's a lot easier conversation. You're not asking for money. You're not asking for anything other than to make a phone call for you and add you to a card. Okay. That's it. So it's a lot easier than, at least for me, when I kind of frame it that way. So authorized users, if that's the case, make sure it's a good credit card. High limit, low balance, great payment history. Okay. Next thing, we might want to open up a secured card or a secured loan. We need to do that as soon as possible to get that report on your credit report. When it comes to the FICO scores, those don't sometimes adjust your FICO scores for a couple of months. Okay, so keep that in mind. If we need to add things to your credit report, we can add trade lines to your credit report. Things that don't typically show up on the credit report, like rent, cell phone bills, car insurance. I'm going to go through a list in just a minute. And if there's any big collections out there that we have to deal with, we might want to structure those and get repayment arrangements before we apply. The things that we don't want to do, we don't want to apply for new credit. We don't want to blindly pay off collections. We talked about that a couple of times. Anything over 2 years old, you got to leave those alone. Less than 2 years, case by case. Medical, leave those alone. 1 to 2 years old, we want to run through a simulator. And 0 to 1 years old, we want to deal with those on a case by case basis. Do not pay off your credit card balances. Pay them down to $10. And don't prematurely pay off any loans. And don't become an authorized user on a new account or an account with any late payments. Not going to help you. Could actually hurt you. And above all, do not ever employ the services of a debt consolidation companies. They are starting to surface right now. They are predatory companies. I don't like to bash an industry, but there's nothing good about that industry. Okay. They are actually prey on people in awkward situations. And I will tell you why. So what they do, okay, they actually will convince people that, hey, can't sleep at night, give us a call. What they do is they get your information. They put all your bills together and say, you know what, start making your payments to us. Send us that $500 or $1,000 a month. We'll pay the creditors for you. We'll contact all your creditors and tell them that you are in debt consolidation. Or now, I should have asked earlier, somebody was asking about debt consolidation. If you're talking about debt consolidation loan, that could be a good thing. Debt consolidation services, bad, real bad. What they will ask you to do is they will tell you to send your money to them, and then they'll negotiate the balances down and make the payments for you. So this is how it plays out. You make your payments to them for 6 months. And guess where those payments go? They go in the debt consolidation company's pockets. That's their profit. And then what happens is all your creditors put on your credit report that you are in debt consolidations. Okay. It's kind of a protective area. So what happens is your credit scores dive like you're in bankruptcy. Okay. No one's going to finance you. You can't get a loan. You can't get a mortgage. You can't get anything because debt consolidation in everyone's eyes is that you are in like a Chapter 13 bankruptcy. And what's bad is you don't get bankruptcy protection in those types of situations. So now they've collected your payments for 6 months. And by the time your creditors are so ticked off that they're about to start suing you, that's when the debt consolidation companies start forwarding the money to to your creditors. Okay. Do not ever, if it's debt consolidation companies versus loans, and there's a distinct difference. A loan is you go to a bank, get a debt consolidation loan, put it all together and have one payment. That can be a great tool. Okay. Because all of a sudden you'll see credit cards paid down. You have one debt, good way to go. But I always like to run that through a simulator before we do it. Debt consolidation services, bad. Okay. So I should have clarified that earlier. So my apologies. Now, here are the different types of credit building tools. Secured cards. Hey, Credit Karma, go out there. Capital One has a great one. Give them $300. They're going to give you a credit card with a $300 limit. It's important you use it. Keep it balanced below 30% if you can. And you'll watch your score go up 20 to 30 points in 30 to 60 days. Great, great tool. Sometimes I get it. It becomes hard. There's never any extra money in my house. So get to know when your reporting date on those cards are, so you can pay those balances down right before they report that data to the credit bureaus. That's kind of one of the tools that I coach people on our private calls. Secured personal loans, these are incredible tools. Credit unions typically offer these. What these are, you give a credit union, they typically charge $25 to $50 to do it, but you give them like $500 and they're going to put $500 in a savings account. So what's going to happen from there, they lock that money down. You can't touch it, but they're going to put $500 in your checking account. You pay that $500 off over 6 months. And then once it's paid off, you'll get the money back. So in your savings account, they release it. So what's great about this is most credit unions will report this to all 3 credit bureaus. And they report it as a line of credit, personal line of credit, which is one of the harder things to get. So I have people whose scores go up 40 to 60 points by using these tools. Okay. So secured personal loan, great tool. To authorize users, we talk about this. It works 90% of the time. It's great on seasoned old accounts with low balances, low utilization, and great payment history. Next thing, alternative trade lines. Now, if you don't have people you can count on for authorized users and we need to build credit for you, here are things that we can add to your credit: rent, auto insurance, payments, PO box payments, storage unit payments, cable bills, cell phone bills, renter's insurance, utility bills, and monthly subscriptions, Netflix, gaming, and gym memberships. These are all things, if you pay these things every month for 12 months, we can get these added to your credit report to satisfy that 2 to 3 trade line requirement. So there are workarounds. All right. Credit monitoring services. I always tell people, please apply for these. Credit Karma does a good job with it. Experian does a good job with it. I like those 2 the most because that covers all 3 credit bureaus. Experian obviously covers Experian, and Credit Union does Equifax and TransUnion. If you have difficulty getting into Credit Karma, and everybody does every now and then, although it's getting better, Credit Sesame is a good alternative. And like I said earlier, credit restoration services. Lexington Law is a good big one. National Credit Care. No need to do these things. There's no need to pay $100 a month to get this stuff done. AI can do a lot of this lifting for you. If you're in that kind of spot, reach out to me before you start paying these things. I coach people on this stuff for free. It's not challenging. I've been doing it long enough where I'm very confident in it. And we can download your credit report for free, put it into different AI models, OpenAI, ChatGPT, or Claude, which is doing a fantastic job writing letters right now. So, and it's all free. So no need to pay anyone. So where do we go from here? Please schedule that call with me. Okay. Also, let me give you a link to register for actually, I'll show you exactly where to register for my next home buying webinar, how to purchase with very little money out of pocket using down payment assistance programs. All you have to do is go to my website, Own the Roof, OWNTHEROOF. You'll see on here, we teach people how to find grants to buy a home and down payment assistance programs. So there are all different types of programs out there. Everything we have on here is for free, and we are all about paying it forward, teaching as many people as we possibly can to get into home ownership. Some of the resources we have here, and I do need to fix this link. If any of you want a copy of my book, oh my gosh, always happy to pay this. Don't purchase it on my website. If you want to, that's great. Takes you right to the Amazon store where you can purchase my books. Appreciate that, but that wasn't the purpose of writing the books. I will send you a copy for free. All you got to do is text me or send me an email at john@owntheroof.com, or let me give you my phone number. Text me at 248-252-7283, and I will send you a free digital copy. Let me get my friends out there on Facebook and YouTube, 248-252-7283. There you go. So, happy to send you copies of my book for free, okay? But like I said, the way AI is crashing this world, we do not need, we can use AI versus, don't get me wrong, I appreciate if people want to read, but AI can take care of this and do a very good job. But if you want to understand the workings and credit and things like that, that's what my book goes over. So, in addition, let's go back here. Other things on my website. We do free webinars. How to purchase with no money down using down payment assistance programs and grants. Okay. I need to update the date, March 18th. We are going to be doing a workshop. Okay. I'm going to do another webinar next Wednesday. So please, I'll change the dates on this as soon as we're done this morning. I will do a webinar probably next Wednesday, and we are doing a workshop April 4th. And that workshop, Saturday, April 4th, that workshop is going to be in my office. We have a large training room. Okay. We can handle a lot of people. So we decided we get so many people that want to, that watch my webinars 2 or 3 times. And I find that sometimes the biggest holdback is they just don't know who I am. Well, I'm inviting everybody into my office, into our training room here in Novi. We are at 8 Mile and 275 Southeastern Michigan, and that's where a lot of my followers come from. So please register for that. I'll be sending out some emails shortly. We are going to go over how to tap into down payment assistance programs. We're going to spend an hour going over that, probably an hour and a half, maybe take a little bit of break from there. And then anybody that wants some personal coaching on credit repair, oh my gosh, I think after that, we'll take a slight break. And then anybody that wants to come back into the training room and do credit repair, I am going to commit to doing some live credit repair for people, okay? Possibly show people how to actually download their credit reports from freeannualcreditreport.com. And from there, we will upload it to AI. So if you have a digital device, please bring it along, and we'll show you exactly how to do that, okay? So laptop, you could probably even do it on your phone. It's going to be tricky. I'm not a huge phone guy, but just the numbers don't work well for my fat fingers on that. So if you got a tablet or a computer, we could probably get you onto our Wi-Fi here and walk you through that as well too. So anyways, so that is going to be April 4th. In addition, on my website, you will see we have a credit repair webinar what you're on today. You can register my webinar there. I also have free courses. Okay. The books that I made, turn those into video courses. So if you want to go through, if you're not a reader and you want to put up with me for probably 6 hours on the no down payment guide, boom, I've got, I think 30 something videos there, 5-minute videos, whatever it is, to go over there. And then my credit repair webinar, it's not recorded. I mean, they're all recorded on YouTube and Facebook Live. You can catch these replays out there. But I did a credit repair course that's about 2 to 3 hours. Okay, so you can watch the videos there in kind of a school setting. And then how to structure these deals. How do we get people into houses with just a few $1,000s out of pocket? I go through that in structured deals with little money. So 3 different courses there, all free. Take us up on it, okay? And then we need to get our events page updated so people can see what live events are coming up. And then, of course, we have all of the success stories in our community. So many people that we've worked with that actually have become great friends. It's my job. I love what I do. And it's absolutely amazing the wonderful people I get to meet and how much I get to learn from them as well too. So it's wonderful. So I'll share you some of that. I won't bore you with the success stories today. If you go to my Zero Down webinars, you'll certainly, I rant and rave about a lot of the people that I am honored to meet during my journey and how I'm able to help them purchase homes with very little money out of pocket. So, I've got Emily here. She qualified for $30. One of my biggest wins out there. Had one last 2 months ago. 70, no, it was almost it was 75,000 with the Tobias Harris program. Oh, by the way, got some great news last night. Anybody in the Detroit area, okay, there's a program that just kicked off, the $25,000 down payment assistance program from the city of Detroit. We just got word that it's going to be announced in the next week or so where we can piggyback that on top of a $75,000 Tobias Harris program. So incredible amounts of money. Never seen anything like that in Southeastern Michigan. So if you're in Southeastern Michigan, you got to reach out to me. Okay. They are not going to be advertising this technique so I don't feel like this isn't something that they're going to be putting out there to the masses. So I work with the lender that's running the $75,000 program. He actually called me last night at 7:00 and said, hey, there was a Zoom today with the Detroit Housing Commission, the Detroit Down Payment Assistance Program, and National Faith, and they determined that we can use part of the $25K to cover the expenses that aren't covered on the Tobias Harris program. So that's a game changer for a lot of my customers. So if you are looking to purchase in the city of Detroit, please reach out to me. That's kind of a game changer when we can start tapping into $75,000 to $100,000 for people to purchase homes. So let's see. Here's another thing, another tool just got launched this week. It's on the Google Play Store. Where is that? And it is our Zero Down Scout. Okay. If you go out to the Google Play Store, Zero Down Scout is the application we just built. I have spent the past year working on this application. More importantly, putting a database together. This database is over 3,000 programs across the country. So if you download this, it's on the Google Play Store right now. It's not on Apple yet. We hope to have it up on Apple. Apple's a little bit more stringent with regards to getting things up there, but it will be up there hopefully in the next 7 days, hopefully before our workshop. But what this will do, this actually will let people search all of the programs that are out there. I mean, you can do that through my website right now. If you go to my website, resources, free program search, go down and you can see, click the button, you can enter an address and see all the programs that are out there. Okay. But you got to run each one, enter your information, and you'll get an email. This is different. If you download this app, enter your information, sign in. Let's just, don't know if it's going to work here. Whoops. You will be able to see all the programs out there. Enter here, Miami, Florida. Let's see what happens. Search, see my programs. Look at this. There's up to 50 programs in Miami, Florida, 150,000 through the City of Miami, District 5 Home Buyer Program, Miami-Dade Affordable Home Buyer, $200,000. So if you have friends or family across the country, let them know, and they're not homeowners, send them a copy of this application. This works across the country. It's absolutely so happy about this, so proud of this. Let me give you a feel for, let's go back. Let's try, here we go. Let's go California. Oops. Let's see, Los Angeles. Let's see what happens here. I don't think, well, there's no price in there. Let's see what kind of programs. Los Angeles, here we go. 90,000, Los Angeles DPA, 90, 100, 85, 161,000 through the City of Los Angeles LIPA program. Tons of money out there across the country. You just need to know how to tap into it. Okay. So I share this on my credit repair webinar to motivate people. Okay. Getting your credit turned around, not rocket science by any means. So don't be afraid of it. And you can do this yourself. There's no reason to pay people for it. Okay. It's hard enough making money nowadays, let alone paying people. These credit repair companies that are out there, they're kind of like a hamster wheel. Once you get on it, boom. No, we're going to show you the quick way to get your scores where it needs to be to get you into homes. This is not about perfection. I get a lot of people that their biggest thing, oh, I'm just waiting for that, waiting to get my credit turned around. I mean, once I get it up to a 700 credit score, I'm like, no, you don't need a 700 credit score. Okay. You just need to get across the finish line. So I know because I've been in that seat and I'm like, yeah, I'm going to wait till I get my this here or that there. No, your life, perfection will never be, it's never been in my life, although it's, it's admirable to strive for it, but it's kind of a hard thing to reach. So let's just map out a plan that can work for you and more importantly, your family. Okay. So the older I get, it was never about me. It's my family. So, and what I don't want to do is build unreasonable expectations for families. So that's it, because the rental market is pretty tough out there right now. So anything we can do to bridge that gap from rentership to homeownership, we're all about that. So I think we speak for ourselves with the amount of free tools we give out there. My commitment, I mean, here I am, Saturday morning, 9 a.m. Love doing these and giving out my cell phone number. So if you have any questions, never hesitate to reach out to us. If you ever want to watch some of these other videos out there, go to my YouTube channel, owntheroof.com. You will see all about the different programs that are out there. Okay. So that being said, I'm going to start diving into some of the questions here. Got it. So yes, so everything I offer is free. Where do I make money? That's a great question. So I make my money. My team and I are here to help people find homes and tap into these programs. So what we do is we're going to help you find the house. We're going to get you pre-approved for these programs, teach you how to structure a transaction so you can get in with very little money out of pocket. And then we're either going to help you, or if you're out of our marketplace, we've got team members across the country that specialize in getting you into homes, getting offers accepted, and getting them structured so you can get in with very little money out of pocket. And my team and I are always here to help. So that's it. So what happens is our referral partners pay us referrals by referring people out that qualify for these different programs. That's it. So all comes from third parties. So that's it. Just that simple. So here's a question. What about manufactured homes and third-party loans? Okay. So I don't know what you mean by third-party loans. Are you talking about borrowing money to debt consolidate? Or, I mean, if we can, as long as we can factor those third-party loan payments into your debt to income ratios, I can usually do that. What about manufactured homes? Manufactured homes become a little bit more challenging because it depends whether it sits on the land, whether you're going to buy land. So when you're buying a home, technically, you're not buying the home. You're buying land that's been improved with a home, okay? So if you want to buy a manufactured home in a manufactured community where you're renting the land, none of these will work, okay? And I will tell you, remember how I was talking about how the debt consolidation industry is somewhat shady, to say the least? The manufactured home community, tough, okay? What's happening in the manufactured home world, it's sad, okay? There are two major publicly traded companies going across the country. They've been gobbling up the mom and pop manufactured home communities for the past 10 years, and they are jacking rents up like crazy. I've got people paying $700, $800, $900 a month just for lot rent. So they entice you in by, oh, hey, buy this manufactured home, and you can buy it at a reasonable price, whatever it is. If it's a used one, maybe you get it for $30,000, $10,000, $30,000, $50,000. Okay, seems great. Get a nice low payment for it. But the lot payment is where they hit you. And the water bills, what they're charging for water in those communities is ridiculous. For a manufactured home, I see people paying $100 a month for water. That's like 3 times what some people pay for similar size homes. So they make their money on the water, they make their money on the lots. And the thing is, once your house is on that lot, statistically, it'll never get moved. That's it. It's too expensive. To pick up one of those things and move them is $10,000 nowadays. With all the permits, it's ridiculous. So they never get moved. So what happens? People sell them back or walk away from them. They sell them to the park. So that's why inside of some of these manufactured home communities, you're seeing a high percentage of rentals. So if you go into those communities, ask them, hey, how many of these are rentals? How many does the actual complex own that are rentals? That tells you how many people walked away and left them there. Okay. So I'm not a big fan of that industry. I think it's somewhat predatory. I think they lure people in with the idea of low cost home ownership, and people get tripped up a year or two down the road. People haven't been tripped up the past couple of years because prices have gone up and people can usually sell for what they had into it, but it's just not an equity position where your home's appreciating every month when you own the land. Okay, so that's my opinion on those. So hope that makes sense. Let's see, any other questions out there? Yes, you can go on the Google Play Store and you will see Zero Down Scout is the name of our application. Hope to see it up on Apple this week. So now, we have not advertised this application at all. So if you go out on the Apple or Google Play Store, I should say, and download our application, please be patient. Okay. If there's any bugs in it, let me know. Okay. You guys are getting a glimpse behind the scenes before we make this more public. Yvette, you are quite welcome. Thank you so much for attending today. All right. Good. Any other questions this morning? Yes, my webinars for the home buyer down payment assistance programs, they typically run about 40, 50 minutes. I'm trying to get it down to about 40 minutes and then have some Q&A. Statistically, and myself included, I don't have the patience to when I'm on webinars, after 50 minutes, I'm timing out. So, but I always tell people as long as people are here to ask questions, I'm here to help. Now, when I'm doing them, I can go on. I've had some webinars go on for a couple hours just because I get so many questions. And sometimes we don't. So in today's, we didn't really push this out to a lot of people. So we don't have a lot of people on today's. Okay, good. All right. Well, we are at the top of the hour, 10 a.m. I want to thank you all so much for watching, attending today. If you have any questions, please do not hesitate to reach out. One more time, I am going to put my link to calendar. By the way, you can always hit it on my website, Own the Roof. You'll see book free call, same calendar. Here you go. Paste this there. And let us go out to my Facebook and YouTube friends. Here is a link to my calendar. Good. All right. Well, thank you all very much for attending today. I appreciate your time. Have a wonderful weekend. And if you want to hit the replay or catch the replay on this, it's being streamed on YouTube and Facebook. If you go to my Facebook Live area, it'll be there for 30 days, and then I think they delete them. On YouTube, it'll be out there forever. So you can go to my YouTube channel, which is Own the Roof, and you can go under live events, and you'll see all the events that I've ever done. They're all streamed out there. So ever have any questions or any family members that are looking to make a move, please, pass my information along. Always happy to coach as many people as possible to tap into these down payment assistance programs and grants. These programs have been around for years. I've been in the industry 38 years. They were around 38 years ago. The problem is that lenders don't lead with them. Think about it. 3,000 programs we've identified and put into our database across the country. I can tell you right now firsthand, I can pick anywhere in Southeastern Michigan and probably come up with at least a half a dozen. Okay. I just did one yesterday for a home in Detroit, 21 programs available to purchase with no money down, using down payment assistance programs and grants. So tons of money out there. And a lot of times it's possible to stack some of these programs if your credit's in a good spot. Okay. Some of the people that I have worked with, give you a feel for it. If I go down here, we've got Emily right here, upper right-hand corner here. Emily, $33,000, $25,000 from the city, 3% from a down payment program, $5,000 closing cost program, and a $500 appraisal grant program. All the money. Okay. Emily also ran the table. She tapped into 25,000. I think she got 3%. I think she did the same thing as Emily almost. So lots of different ways to get people across the finish line. So, and the stories, countless number. Okay. Every month I get wonderful people that I'm blessed to cross paths with and help them out. So if you have any questions, never hesitate to reach out to me. My name is John Collins. You've got my contact information. Hope our paths cross again soon. Have a great day, everyone. Goodbye.